Hi everyone, how are you doing? I'm super excited to be the moderator for this panel discussion. My name is Ting. I'm a journalist from Cointelegraph and a corporate communication strategist. Before we jump into the topic, the future of decentralized finance, I'd like to get the panel's general opinion on how important is DeFi and how disruptive it can be for our current financial system. So, Aaron, would you like to go ahead first?
Yeah, sure. Thanks so much, Ting, for moderating this panel, and thanks to the folks at the Global DeFi Summit for putting it together. My name's Aaron Wright. I'm a co-founder of OpenLaw. We do quite a bit of things, but what we specialize in is basically taking digital contracts and agreements and making them compatible with blockchains and also just compatible with computers more broadly. What we see really over the past year or so is just a blossoming of the Ethereum ecosystem. I think we've seen quite a bit of excitement over the past couple years about how Ethereum really can begin to transform the commercial world. And I think that we're finally seeing that come to fruition. So when Ethereum started out, people were super excited about creating tokens, creating assets, using that for capital formation purposes. We saw that obviously in great length in 2016, 17, and 18 with the ICO boom. And there was some obviously wonderful and interesting things that came out of that boom, but there was also some things that were obviously a little bit unsavory about what happened there. And in its wake, I think we've begun to see how Ethereum really can fulfill the vision for many folks in the blockchain ecosystem and how it can actually be built to support global permissionless infrastructure. And that, I think, is really what decentralized finance is all about. And that's obviously a very broad umbrella. Covers things like stable coins and lending protocols and protocols that help you create synthetic assets. Also helps an ecosystem of projects that are thinking about options and other core market infrastructure, insurance. And I think that the next couple of years, we're going to see a continuation of the development of kind of core market-based infrastructure that can be used to really build this global permissionless peer-to-peer system that I think many of us are deeply interested in. And on the OpenLaw side, we're really excited to support that. We actually just helped out the Aave team today, introduce a really interesting new way to do lending in a concept called credit delegation, which I think is really exciting. And I think we're going to start to see just these new types of ways to engage in financial products and services due to the speed and efficiency of Ethereum that I think we couldn't have imagined in the past. So it's a pretty exciting time to be a part of all this.
Great, thank you. Luis, would you like to share some of your project briefly and in what ways that your project can influence the future of finance?
Yes, of course. So my name is Luis. I am co-founder of Gelato Network. We're still quite early. We recently launched our version 1. And yeah, so I think what we want to bring to DeFi is a better user experience, but also a better developer experience. Hi, Stani.
Welcome.
And so what we see is kind of lacking at the moment still in DeFi is a lot of things like automation. So I think the DeFi user experience for most users, especially for more non-technical users, is very manual still. And even though DeFi has like all these new amazing autonomous components like smart contracts, actually when you look at the space, the real power users at the moment are just a handful of arbitrage bots, like very sophisticated people and company running bots. And I'm getting a lot of feedback on my audio. I'm not sure where it's coming from, but yeah. So yeah, now it's better. I think maybe it came from Stani. I'm sorry about that. So yeah, what we really want to bring is we want to give developers an easy way, and we want to give them the tools to automate any aspect of the debt. So you can think of what Chainlink did for decentralized oracles. They solved the problem there to a great extent, I believe. What Gelato wants to do is we want to make it as easy for developers as well to just plug into a network of bots that will serve any automation need they have. So that could be automated trading, that could be automated interest rate refinancing. Gelato is built in a way that's very general and very composable, and it's really just a matter of submitting a task on-chain or off-chain to Gelato, and then it will be executed for you based on some conditions. So I think this has been too hard for developers to build, because in the DeFi space, if you have built a DeFi app yourself, you will notice that if you want to automate something, it's really hard to make it in a decentralized way, because you would have to not only build, test, and run this infrastructure that isn't even your core focus. Yeah, right. You want to focus on your dev, but now you have to build all this yourself and just to automate something. And then to have it decentralized, you need to incentivize a whole network of different parties to automate stuff for you. So this shouldn't be on a developer's concern, just like it shouldn't be on a developer's concern to build a decentralized Oracle for every dev they build, right? So they should reuse Chainlink there, I believe, or some other solutions maybe. So yeah, we want to provide a simple protocol for developers to just plug in, submit the task, have them automated, and then to be able to offer their users automated trading and just a whole lot of much better user experience than now, right? Like even limit orders have only recently been on DEX, but there's a whole bunch of stuff missing, like stop loss orders. A lot of stuff that is there in the centralized world in Web 2, and I think what Gelato's mission is to bring that into DeFi over the next 1 or 2 years, and just a whole range of new use cases built into dApps that feature automation.
Great. So we tapped to some of them. One of the main challenges that you're talking about is technical development, but we're going to go back to that question later. Stani, welcome to the panel discussion. We were just kicking off with introducing the project, each project. So would you like to tell us a little more about Aave?
Yeah, sure thing. Yeah, so I'm Stani. I'm from the founder and CEO. So basically, Aave is a money market protocol, which basically means that you can deposit cryptographic assets and earn interest. And at the same time, you basically have a credit line that you can exercise and borrow some other assets. So the Aave protocol is a open source protocol, and basically we launched this year, January, and it has grown quite substantially. And as a protocol, basically our goal is to open many money markets where you can actually use different kinds of collateral assets, cryptographic assets as a collateral to borrow liquidity against. We started as a team a few years ago with kind of first lending protocol on Ethereum called ETHLend, short for Ethereum lending. And since then, we have basically come up to this point. The interesting part about Aave protocol is that in DeFi, the narrative has the total value locked. So basically how much value you're locking into smart contracts, and this kind of like a meme metric is used to measure like the strength of the protocol. And what's interesting about Aave is that we are trying to kind of like figure out how to reutilize this value and unlock value. And our protocol has basically flash loans, so you can borrow 100% under collateralized, but for one Ethereum transaction, which basically means that you can actually use that liquidity without a collateral within the Ethereum composability. That's pretty cool. And we also continued the narrative a bit of unlocking value with the new function called credit delegation, which we are actually working with Aaron from OpenLaw. And the idea is that we have so many depositors that are actually just depositing to earn, but are not exercising their credit line. And what it allows our depositors to do is basically to delegate their credit line to those who actually could borrow, and these depositors can actually earn more. And I could see in the future, basically what happens is that that liquidity could be used in, for example, across DeFi. We recently made a kind of a first credit delegation transaction actually today with Diversify. and we used OpenLaw for this transaction to conclude the agreement on the credit delegation and basically execute the Ethereum calls. And what it allowed us to do is to allow one of our depositors to delegate their credit line to diversify who is using that liquidity in their trading activity, which is pretty cool. But I imagine in the future, traditional finance could actually use as well credit delegation, where they can actually source liquidity from DeFi. They would be sourcing, of course, stablecoin liquidity, but I imagine that in the future you could actually convert quite easily stablecoins into, well, crypto dollars into basically fiat dollars and use that liquidity in traditional finance. So it would be pretty cool if in the future someone is walking on the street and buying a car or a house, and part of that liquidity is sourced from DeFi. And that will eventually grow the space quite a lot. So that's what basically Aave is all about.
So you're seeing DeFi as the bridge, that bridging the traditional finance with cryptocurrency.
Yeah, I think in one way, yes, because I see DeFi as a kind of like this global liquidity pool, a bit like the oceans that we have. So we have the oceans, but they're kind of like different depths and in different places, different temperatures and so forth. And I see the DeFi liquidity kind of similar. So you can actually plug in, like everyone can go into the ocean to swim. And I would see that in the future, basically, traditional finance could actually plug into this ecosystem. And what's cool about like DeFi in general is that it's interoperable by default, which basically means that you can use DeFi, anyone can use it, but more importantly, anyone can build on top of it and launch a financial product or a product that's not even financial, but is using DeFi to some extent.
So what are some of the main challenges that are facing DeFi today? Is that more technical, as Luis mentioned it earlier, that we don't have enough automatic solutions? Or is that more related to economic models that needs to be changed to more adapted to what is moving forward? Or is that more legal compliant issues? Aaron?
Sorry.
No, Luis, go for it. It's all you.
I just wanted to say I think it's all three of them. But
that's what I was going to say too, Luis.
So I think technically it's very hard. I'm not sure if this is going too deep into the details, but shipping a product in DeFi is I think mostly very hard, because when you ship to mainnet, the conditions on the Ethereum mainnet are so different from your usual testing environment. And normally when you develop something, you want to test it very well. And I think the biggest hurdle for developers coming into the space is still the lack of easy to use tools, even sometimes the lack of documentation. There are some projects like Bidla from Nomic Labs that have done a really good job at that recently, but I think the biggest, and that's probably also why we see so many exploits still, or hacks sometimes, is because it's just really, really hard to build and then test this stuff. Because in production, in Ethereum, everything is very, very different from your testing environment. So I think that's probably what I would say needs to really improve.
And that's what I think is so exciting about Gelato and other projects that are coming up that are trying to really build out the infrastructure. So there's definitely a tremendous amount of core Ethereum infrastructure that needs to be built. If you look at it kind of in a higher arc, right? We saw kind of before the ICO boom, a lot of dev tooling coming out, things like Truffle and Infura, which just made it possible to actually get a project up and running. We've conquered those hurdles, but there's still a long way to go and some more refined dev tools that need to be built. And also, gas is pretty expensive. So thinking about how to manage those costs, both for projects and also for broad consumers, so that we can bring in the traditional world, like Stani mentioned, is something that needs to be managed as well, particularly as, and assuming that Ethereum continues to go in a bull run. I think we're making good progress on the technical side. I think these types of innovations always drive that and leave like a lasting legacy that will set up the next Ethereum wave even after this one. And obviously, it's not a crypto conference, and it's obviously not a DeFi conference if you don't talk about some of the legal and regulatory issues. The last time folks got really excited was the ICO boom, and that obviously had lots of complications ranging from what are certain assets, tokens, and what should they be classified as, commodities, securities, etc. We're seeing new innovative models, particularly around DeFi protocols, where they want key parameters to be managed by the community. So they're providing governance rights to the community of users that are using the underlying protocol. And I think that's really innovative. I think we're going to see a lot of innovation also in managing those governance rights and thinking about blockchain-based voting schemes. That's probably a separate panel. But there's still questions around whether or not that's going to satisfy global regulators. And Ethereum, in particular, since it's global by default, it's the ocean, like Stani mentioned, that flows everywhere and also seemingly flows nowhere at the same time, at least from a jurisdictional perspective. There's still going to be questions about how these things square with legacy rules and laws, etc. So as we kind of move to the era of being ruled by code, away from rules of law, there's going to be lots of complications on how to deal with that. I think my personal view, and this is something I still think about, I do think that the governance token model is really supportive of communities, of users. I think there's a lot of advantages to managing open source protocols, especially if they become wildly important and fundamental to our day-to-day lives. To have that in the hands of users, to make it democratic in terms of its fundamental process. So I'm hoping that regulators see that value and just don't see prices going up in some instances, although not all instances, and clamp down as a result of that. I guess the other question is always AML, know your customer related issues, which are pervasive. So as you build a permissionless system, that kind of runs a bit into some interference with the current system, which is in effect permission to these know your customer related requirements. So I think particularly for stablecoins, that's going to be something that we see over the next couple months. FATF, which is a global group of regulators, is already teed into that. And then I think we're just starting to see the beginnings of the threads of DeFi, and it depends on how you define it. But I think we're starting to see the emergence of DAOs. OpenLaw is being used for a great project called Allow, which is really thinking about how to not just structure core market infrastructure, but actually group interactions, which is super cool. And there's lots of legal questions there as well. But so I think it's going to come. I think we're on more solid footing than we were before, and that outside of the technical ones that we just went through, I think those are some of the regulatory challenges that we have to deal with.
See, Stani, do you want to add to that?
Yeah, I think Luis and Aaron, I think I agree quite a lot. I mean, especially with the technical part, there's like so much still things to do. I mean, things could be way more easier, especially like I can speak a lot for like DeFi, but I mean, it's still very early state, but so many things have been built. But when you look other things in the on-chain ecosystem, there's still so much stuff yet to be built. For example, like the e-commerce or the ecosystem of collectibles, non-fungible assets, and so forth, and tokenization itself. Like there's so many things that should be built, and the functionality is still kind of like missing. But that's the cool part, because it brings like a lot of opportunities to so-called like on-chain entrepreneurs that are looking to build things, and this is all available. Like that's the cool part about when you're building stuff on chain. You just basically can execute any kind of idea. It doesn't require that much of a capital, at least to some extent. And I think, for example, if you look at Aave as a protocol and its functionality, it's pretty like well-designed product. I mean, it has been designed with the community, and kind of like we had like very good feedback rounds and experience with that. But there's like so many things that you could actually do and are still missing. And for example, if you look something like Gelato, that allows you to kind of automatize a lot of things, you could actually not just basically perform, let's say, just collateral swaps or debt swaps, but you could actually automate things that will actually suit your user behavior, and that's like pretty cool thing. So I think definitely like there's still a lot of things to do in terms of like technicalities and the tools that we are using. I'm pretty sure like these things has to go like forward. In terms of like regulation, I think the good thing about at least for DeFi is that it has been a bit quite okay in terms of like self-regulating itself as an industry. So people follow this kind of like a narrative very closely. If some new standards appear and basic new ways of actually doing things, it used to be like when you build on-chain systems, you usually don't in the like long time ago you didn't audit anything, and now you usually audit the code at least a couple of times with 2 different providers, and you usually now even do formal verification and even financial economic modeling. And we see on this happening on the bigger protocols. There's still kind of like this behavior where people deploy kind of like YOLO code into the mainnet, and it's in one way it's kind of like not very good thing, because in one way, like even smart contract audits per se, they don't help you to save yourself from vulnerabilities, but also because it kind of like is a narrative that goes against where we are trying to take DeFi further. And the less we're actually trying to create better standards and kind of like regulate ourselves, and the more regulators have to come in and step in and basically create regulation, and that might not be the very favorable for the market operators, and then the value added of like DeFi will evaporate, and that's kind of like very, very sad path if you go there. And I think it's just something like what's interesting about OpenLaw, for example, is that you can create different kinds of wrappers, legal wrappers on smart contracts, and you can even execute, because I didn't even know that until today. I was developing something that related to OpenLaw, and I was more using it as a kind of like a legal wrapper on my contracts, smart contracts, and it actually I actually was able to deploy the contract from that OpenLaw framework with the legal agreement. So that was a pretty cool thing. So we will see more in this kind of systems evolve, and as the governance evolves as well, and we have more DAOs involving in the space, and the decision making is up for the DAOs, that will take us further.
It's more like the whole traditional tycoon is going to move to digitalize the world in the future, to me. But you have also tapped into the gas fee earlier, Aaron, that you mentioned about the gas fee. So my question to Aave is, how much is the gas fee for your flash loans right now? Do you think it's a bit too much for the current flash loans, and how would you address that if it's too much?
Yeah, they are like all the gas fees on Ethereum are now too much. Like it almost makes me cry. I mean, it's like you send like small transaction or like do some small interoperability or any kind of like interaction. It makes us a bit, I don't know. It's really not the ideal now, because like the idea of DeFi is to democratize a bit of this landscape, and like the only idea of actually participating in this kind of DeFi activity and earning yields or farming whatever is that you basically get some yields, and that's how we incentivize people into DeFi. And now we have a situation where kind of like it's a bit less democratic, because you have to be a whale or you have to have like quite substantial amount of funds to earn anything, and it kills that democratization. But I think still, even though the gas fees are high, people are still doing things because it's very fascinating. So I agree that the gas fees are very high and it sucks, but I hope that we're able to get it down somehow. So I'm not talking about just Aave here, but the whole Ethereum that we have a problem.
Yeah, absolutely.
Okay. So what, according to DeFi Pulse, the value locked into the DeFi platforms has jumped from 1 billion to 3 million the past 2 months that we've seen. It's substantially a jump. So what are the driving force of this DeFi boom? And would you predict that this trend to continue in 2021 and beyond? What would happen next?
I can take that. I mean, I think the jump was in part due to the great products that we're seeing, things like Aave, things like Maker, Compound, Synthetics, a whole host of really core technical innovations. But I do think that there was a bit of lighter fluid added to the fire when we saw Compound release this governance token model. That's when things really seemed to take off quite a bit. I think that was in part because people feel like this may be a healthier way to support open, decentralized, blockchain-based financial protocols. And number two, I think people began to recognize that this is a great way to really spread the word about a project. And it wasn't just Compound, it was shortly followed by a great project, a DEX called Balancer, that was able to really enhance some of the work that Uniswap's doing, and I'm sure they may quibble with that statement, but kind of another way to get some DEX-related pooling. And I think that's really caused an explosion. And I think the other piece, which it's always hard to quantify, but it's just the general uncertainty that I think many of us are living on and in and through as we go through these tough times. So I think that's a piece of it. And then obviously there's a lot of capital floating around at the top. So I think that's starting to percolate down a bit too.
Luis, would you like to add some of your comments on that?
I think that the recent rally was long overdue. So in a sense, it's definitely justified. It's definitely, for someone, I was already in the space before the bull run of 2017, and I remember how many friends of mine joined and really got hurt and left the space and never returned. So I'm a bit careful. I hope that this won't repeat itself again this time. Yeah, but I think it's justified. I think that the projects that have been working all through the bear market and have been shipping really great products like Aave, like Synthetics, they have now all really seen a rise in value that they really were overdue for. So I think it's good. We just need to make sure that the new people that enter the space kind of know where to go and where not to go.
I see. We don't have much time, but I have 2 questions left. So I hope we can wrap it up finish those 2 questions before we wrap it up. The question, one of them is for Aave. It's from one of my friends, and so Alex, if you're watching this is for you. So Aave is planning the migrate from land token to Aave tokens. So for 100 land, you can get 1 Aave. And how does it impact the land tokens already in the Uniswap liquidity pool? And does it automatically change into the Aave token? So, Stani.
That's Alex. So there is a conversion rate basically from 100 to 1. And basically, of course, like when there's token migrations happening, what usually take place is that you need to go all the tokens through a migration contract, and unless there is a way of that particular contract that you're using or interacting, let's say some sort of DEX or even centralized exchange would actually do it for you one way or another. So basically, that is something. If you're providing liquidity into Uniswap, you basically have to take that liquidity, convert to migrate your tokens and get them back. But it's actually an interesting question because it's also a bigger picture thing in a way that we see like a lot of trading happening in the past in centralized exchanges. And one of the interesting things is that now the kind of a DeFi and decentralized trading and this kind of like automated money markets, market makers like Uniswap and Balancer, they're getting more and more popular because you can basically, as a retailer, stack your liquidity there, and basically you're earning trading fees. for your portfolio. So what's interesting is that one of the parts that we want to achieve with the token migration is to get as much as liquidity and the tokens that our community has out of the exchanges, and basically to migrate and then to stake into the security module of the Aave protocol, which actually is kind of like a way of providing security for the depositors. And also it's kind of built in a way that you can also at the same time stack and stake liquidity into the balancer liquidity pool of Aave, which means that you're providing decentralized liquidity and also earning trading fees as well there. So the idea is to kind of like get people out of this centralized system into this decentralized system, and also kind of like support the ecosystem, but also for the reason that these tokens are governance tokens. So the idea is actually to use them and vote them. And if you are not active kind of like a governance person, like for example me, I'm not into governance. I'm from Finland originally, but I like we have quite high voting average here, but I never vote because I'm not just into governance that much. And you can delegate your governance power. And the point mainly is that kind of like even though people aren't directly voting, for example, it doesn't necessarily mean that they don't care what's happening in the protocol. And passive kind of like voting is also kind of something that happens where you don't vote if everything is going well, which is basically what I do.
Okay.
So that's kind of like ratio behind of this migration in one way.
I see. So we are running out of time, but Aaron and Luis, I'd like to get your final comment on one prediction of what would happen in DeFi in 2021, just before we leave the panel.
I think one thing being in the Ethereum ecosystem for pretty much from the beginning is that you can never bet against Ethereum, and it always exceeds expectations. So I think that we're kind of hitting that period again. And I think it's going to be a really interesting year. We're going to see a lot of tremendous innovation. And I think it's a really exciting time for the folks that have been slogging away building for the past couple of years to really, get some sunlight and some interest in their projects. So I think it's a great time to be an ETH developer or an ETH project.
Cool. Thanks, Luis.
I'm also really looking forward to 2021. I think we will see a flood of new people entering the space, investors, but also developers. And I think it will be also the first year that we as developers really look at, okay, how do we maybe migrate our dApps to ETH2 eventually, because hopefully ETH2 will go live, right? So, or like the beacon chain will be live. So I think 2021 will be a really, really good year. Okay.
Stani?
Yeah, or maybe Andrey, if we got Andrey to say a couple of words.
Hey, hello. I was trying to connect for 1 hour exactly, and support was helping me with 2 accounts and 4 different devices. I have no idea what's going on. So, but glad to see you all. Thanks.
Cool. We're wrapping up the panel. So one prediction for 2021 for DeFi, what would it be?
Can I have 3 minutes and then I can summarize all my view for all the questions we discussed? So I have it in front of me. So first of all, Opium is like a Bloomberg for derivatives. We have all kinds of derivatives, and it's like a ticker which you can list within a couple of minutes. So what it means that a lot of DeFi growing into the 4 billion 4 or 5 times. I think it means it's certainly good news, but it's not a real financial system yet. So what we discuss a lot is that it's a lot of risks in DeFi, and currently 4 billion is a lot of yield farming, you know it. And yield farming is basically multiplying risks a lot again and again and again. And this is kind of pyramid games which are known already for like ages in a financial system. So be very careful. It's a good sign, and we're all really happy it's growing, but it's a lot of tail risks involved. And once it's going bad, it's going bad for everyone. The main challenges faced DeFi, I can speak a lot, but number one, I would say this risk. This risk is not clear. So people just getting return, getting yield, getting more yield, but they don't realize the risk what they run. If you ask 99% of the people, they don't realize, and only few people realizing it, and they quite scared. So it's going to be a lot of financial crisis, and simple regulation or simple risk metrics is really needed and really would be helpful. I'm not negative. I'm somewhat critical, but because I like it too much, so that's why I'm critical. Next question. What to start with? Start with the basics, money markets. So Aave is a perfect project to start with. So I'm now advertising Stani, but because it's really like everything starts with money markets in the financial system, then it's interest rate swaps, then it's fixed income, and so on and so on. So start with this, play, but think about the risk. And the last question was, basically I answered all the questions.
Thank you so much. Thank you for all your time, and this was a wonderful discussion. I hope we'll have this discussion again and see if these predictions are becoming true in 2021 in the future. And thank you, and good wish to all of you with your projects, and looking forward to more great news from you guys.
Thank you very much.
Thank you.
Thanks.
Bye.
Bye.
Thank you. Bye.